The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. 24 minutes to go until the start of trading, and we got markets in positive territory to kick things off. We got a big week. Jackson Hole will be the week. You'll get some Fed speak out there, and you will get the main event, Chairman Powell, Friday, 10 a.m. Eastern Time. And you know what's cool is we have our man Larry Pesavento. He does his live trading Fridays twice a month. This Friday, he's going to be live trading. When you get Chairman Powell at 10 o'clock in the morning, usually you'll get the chairman's remarks released prior to 10 a.m., and then, of course, you have the remarks themselves. And, yeah, sometimes you get some volatility, sometimes you do not. We find out on Friday what he will deliver in terms of the September rate cut. Now, remember, we get August numbers in terms of we get August jobs, non-farm payrolls, I believe September 6th. The September meeting, September 18th, so they do still get a full another month as in August data. They'll get all the August data before before their September meeting. So you're probably going to hear something like that from Chairman Powell, right? And we're jumping right into it before we even look at the markets. We will. But it's going to be in focus. It's been quite an acceleration from the lows we had 2 weeks ago when you were talking about August 5th. We all woke up Monday morning or Sunday night, we had markets down 3%, 5%, 4% sometimes. And yeah, we've gotten it all back since then. And check it out. You look at a monthly, we got a green bar in the S&P 500 monthly bar, quite a tail to the downside. That tail going all the way to 51.20. And when you put it back on an hourly, I think that gets us to the top. Let's put it on a daily just to be sure. You got to go back to July 16th, but just check out where you were on August 1st. The high there on August 1st, what is it? Let's get it. 5,600 on the dot on this one. And I got, 5,600 on the dot. Some nice round numbers for our man Basil Chapman. 5,600 on the dot. We go down to 51.20. That's a drop of 480 points. I think it was about an 8.5% decline to kick off the month. And we're up more than 9% off of the lows in this market right now. When you think about it, and it's only August 19th. So you go down 8.5% to kick off the month. You got to get 9% back to get even. That's right where we are right now at 55.87. And we're only 19 days into the trading month. And we got a green bar, even though you kicked off the month with a slide of 8.5% in the first basically 3 or 4 days of trading. Pretty remarkable. All right. Going back to a little short term, the action this morning. S&P is up by 9, 55.87. You see the acceleration from where we were even just a week ago. We're up, 240 points from where we were then? 53.47. You climbed higher last week. We're up by about 8 points in the S&P. NASDAQ 100, we're up by 24 points, 19,631. You get the Dow up by 40 right now, trading at 40,834. And the Russell up by 4 points right now. Commodities. Currencies, whatever you want to call Bitcoin. Bitcoin down $1,200. You always get a little volatility over the weekend. But you can see that we actually opened up Sunday night pretty close to where we were at the close of Friday. And then we had a little sell-off last evening. We're trading at $58,740 right now. Crude, $75, $75.36. We make it to a low of $74.52 on Friday. We take a look at the daily on crude. And maybe we're heading back to these recent lows of $72, 72 and change. We were just up to 80 on August 13th, right? A week ago, we were pushing 80, and just like that, we're back at about $75. Gold was higher in the overnight. Back it up for a 15-minute for gold. You see the climb Friday. Sunday, we open at $25.49. We were higher at about 4 in the morning as well. We get a little bit of a sell-off. You have gold negative by $8 right now. And then we jump to the all-important notes and bonds. And right now, I got a 10-year yield sitting at 3.89%. We'll call it 3.9 actually, because it's 3.898. 3.898. So you got the 10-year sitting at 3.9%. Okay? It's been a remarkable run to higher price and lower yield since the April lows. We are now back basically chopping around at where you were in the beginning of the year. And remember, beginning of the year, we were pricing in 5 to 6 cuts coming down the line. The market, I think it's 30 basis points priced in for September right now. Things have changed dramatically over those times, right? But we are at 30 basis points, basically talking about the Fed is going at least 25 basis points in September. There's a chance they actually even go 50. I don't think you're going to see 50 with some of the rhetoric, some of the financial data that we got last week, right? Retail sales, some of the inflation data a little bit weaker, retail sales hotter. So what's coming in? Inflation, not as big of a problem. The market, more resilient than maybe we anticipated 2 weeks ago. With that in mind, the 10-year is priced at 3.9%. Now, I'm going to make sure I find the article. I'm not sure I have it up here, but I was reading a good one from Bloomberg this morning talking about the risks of what the market is pricing in right now, and some bond traders taking some insurance at these levels, because if we see inflation come back, right, with the 10-year sitting at 3.9, longer term duration, if you're in duration and you either get higher for longer, which is a very real possibility right now when you think about the strength of this economy, when you think about the productivity gains we're gaining from AI, and then you just think about the risks of higher deficits on a yearly basis, right? Higher debt, sustaining that debt, printing money to just sustain that debt. When I look at that debt and you think longer term, 3.9% for a 30-year loan, okay? I don't think anybody would realistically lock in 3.9% for 30 years if they knew they were going to be forced to keep that 30-year, even 10-year, right? You can always trade that out. So you're trading that right now. You have the option, yes, if price moves dramatically. But I was thinking about this even this morning. 3.9% over 10 years, okay? You're talking about approaching the year 2035. And just think about the deficits and how that could influence the longer-term interest rates that are necessary because of potentially a debt that has to be serviced, and that is going to push things forward to an inflationary factor. And I'm not talking about, end of world scenarios. I'm just talking about that maybe 3.9% is an area where risk reward wise, coming into the speech this Friday, there's a very real possibility that we might not be getting those 5 or 6 cuts as quickly as the market thinks. And what happens if we figure that out? And what may happen is you may get some movement in notes and bonds like this, where we just dropped off 10 points, just like that. When I was doing some work this morning, I think I had the 10-year yield at about 3.88 or so. We're now sitting at 3.9, just like that. So we'll see. But you look at this chart, you look at where we are, and you're at higher levels, lower yield, and I think there's a real risk, man, because, you get 2 scenarios, right, with Chairman Powell. He's either going to remain where he is talking about data dependent. He's going to talk about they get a whole other report, as in they get the whole month of August before they make a decision in September, okay? And he is going to be able to make the case, as I've talked about before, that they're at 5.25 or 5.5% right now. They can come down to a 4 handle potentially and still argue that they're restrictive. But 6 cuts, that approaches a 4 percentage point, which is actually almost a 3 handle. I think that's pushing it. I think there's a lot of risk to this market. I think he is going to remain data dependent, and I'm not sure he's going to give the market what they expect with this type of a turnaround. We got a lot to talk about today. Stay tuned, folks. I'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got markets in positive territory, green right now in all four indices, and we got the 10-year right now approaching 3.9%. And so jumping back to part of the conversations here that I was talking about in terms of the Fed, okay? Now, the Fed's going to be in focus, man. Jackson Hole, there's been a couple weeks. If you remember, I think it was August 2002 when Chairman Powell really came out. And think about that. That was 2 years ago. So, you know, the market listened, man. And that was, to put things in context, I think it was August 2002. Let's back things up on the S&P for a second. Yeah, it was here. That he came out and said, hey, inflation is a real problem. We're going to be higher for longer, period. End of sentence. You got a 3.5% move down the day he did that, and like a 3.5% move in the week following. Reading about this morning, maybe somewhere in one of these articles that we're about to talk about. Okay, but here. First, let's go to the basic fundamentals, right? Traders need Fed's rate cut signal to keep stocks rallying. That's an opinion, okay? Even though this is not technically an opinion piece, because that might not be the case in terms of if the economy is strong, then you don't necessarily need that. But what you do need is it to match up with the anticipation of where the market is, and the market is priced in for many rate cuts. So that's where things differ, okay? And is Chairman Powell going to signal that? If he does signal that, then you're just meeting market expectations. So that's the dicey part here, and that's the part that's going to bridge to this next article we're going to talk about, okay, is that bond traders are seeking protection from an inflation threat. Markets are priced right now with cuts coming down the line dramatically. And if he doesn't deliver, and he may not, because he usually doesn't, right? I don't think you're going to have a moment like you had in August 2022 where Chairman Powell said, hey, inflation is the problem here. We're going to go higher for longer. Get used to higher rates. I'm paraphrasing all of it, right? You're not going to have a conversation, at least right now, where he says, hey, inflation is over. The market needs stimulus. We're going to bring it. That is not even close. And that's kind of where the market is priced in to a certain degree, with the 10-year sitting at 3.9 off of a high of almost 5%. So where's the risk there? Well, there's some risk if he doesn't really do it. The debate shifts from will they or won't they to how big will they go. And that's where I think you're not going to get a lot from Chairman Powell. One man's take, okay? But I don't know why he would give a lot when the economy's doing fine. Retail sales went up 1% month over month last month, okay? And there are serious threats to inflation. I mean, we've had some great calls. I forget whether it was maybe Jose in Lakeland, but talking about, what happens when the rates begin to cut and then you get the inflation back into housing, right? That picks back up or something to that degree. What happens in that accord when that in factor, right? There are going to be factors when they are cutting that are pushing some of those inflationary forces back into the market. So, yeah, it gives a lot of take in this article, but the numbers are priced in, right? And that's the challenge for many in terms of figuring out where could they go. Yeah. Markets are so confident that rate cuts are coming very soon. It doesn't even matter whose take these are. These are just ideas that you should have as possible scenarios that come down the line. It would be a huge surprise if Powell did not reinforce that's the path ahead. Would it be a huge surprise? I don't think it would be a huge surprise if he didn't reinforce that rate cuts are coming very soon as the path ahead. He's probably going to illustrate that September is a very real possibility and that they still have August data that they'll get at the beginning of September to assure them that the trends that are in place remain in place. But I don't believe that it would be a huge surprise if he doesn't say cuts are coming very soon. That's the one to hinge on, okay? I mean, look at these numbers, and this is where things get dicey. If he doesn't deliver what the market wants, right? Is there risk parity here? If he delivers, I mean, if he delivers, right, and says, that's it, we made it, we're going to have to start cutting and we're going to start in September, yes, you're going to see the market take off. That's not going to happen. That would be outlandish with the data, I think, at this point. You've seen the market overreact before. Look how much market cap just got added. Pretty remarkable. Just from that August low 2 weeks ago, over $3 trillion added. So you take that context, right, and then you go to bond traders seeking inflation. And this is what they talk about. And these are the risks that you should be aware of, okay? Fund managers are amassing positions that would cushion fixed income returns in the event of an inflation shock. Shouldn't quite be a shock, but it's not what the market is pricing in, so it would be a shock in that regard. Taking advantage of declines in market-based gauges of future inflation to build up protection on the cheap, okay? And this is what's going to get interesting, man. Rate cuts now in the cards. Recession has replaced inflation as the dominant concern. But there are still inflation risks out there. And you got a bunch of different takes from bond managers. We think the fear of recession is overdone, that the inflation risks are possibly underpriced. So what do you have? You have the risk of inflation, you have the risk of recession overpriced, and you have the risk of inflation underpriced. Might be the case when you're sitting on a 10-year at 3.9%. When this market's been on fire, growth is everywhere, retail sales are strong, initial unemployment claims, pretty healthy number overall, and they're talking about it. Long-term inflation expectations, all right? Europe's in the black. U.S. inflation swap forward 5-year is in the red. You can see the dramatic come down we've had. We're approaching levels that we have not seen since basically, what do they say here, 2022. Yeah, since the beginning of this chart, basically, all the way on the left in terms of those concerns. The last mile is the hardest, right? I think that quote's even in here. Remember that one, because we've seemed to have forgotten it pretty quickly. And this is just recognizing the risks that are going to be there. And this is why this all factors into Chairman Powell, his words, when he comes out Friday, how clear he's going to be on the path forward beyond just one cut, their path, etc. It's not going to be there because he's not so sure, because these risks are probably in his mind as well. If inflation proves to be stickier or goes up again, that could derail your portfolio if you've got exposure to duration. And that's what I said earlier. I mean, think about really locking in a yield of 3.9% for 10 years. With where deficits are, etc., I don't think that many would take that number in the longer term. And that's why mortgages are so attractive for consumers, because you can take that number and lock it in, and then you get to close it out if you want to. Even on the 30-year, 4.15% right now on a 30-year treasury, 4.15%. If you think about the forces in play for higher for longer, the real rate of return over inflation, seems like those numbers could possibly be higher on a longer term basis with where we are, with a strong economy, etc. Speaks for itself. We'll talk about this. We'll talk about tech stocks, hedging, right? After the NASDAQ, hedging on bonds, a lot of hedging this morning. Stay tuned, folks. We're coming back from the market open. I'll be right back. S&P's up by 5, NASDAQ 100 up by 10. We'll be right back for the bell.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got the S&Ps up by 5 points to kick off the trading week. At NASDAQ 100 up by 7, Dow up by 51. You got the Russell up by 5. We jump around some of the biggest dogs out there. Apple, we'll kick it off with. Apple, dip a little bit lower near the bell. We're down by about 0.4% right now. You jump over to Amazon shares. They're up by about 0.4 right now. Microsoft, up by 0.3 right now. We jump over to Netflix, up by about 0.2%. Tesla shares right now, there's a pop for you, up by 1.4%. Google shares up by 1.4% as well. AMD, I think they were buying somebody I saw this morning, right? Small company. Let's see. Yeah, ZT Systems acquisition. So they get a pop and then they give it all back. $4.9 billion deal. Not sure the market loved it, and then they gave it all back, just like that. A provider of AI infrastructure for hyperscale computing companies in a cash and stock transaction valued at $4.9 billion, including an earnout payment of up to $400 million. So AMD. Market says, I love it, and then says, we'll bring you back to where we were last Friday. NVIDIA shares right now. I believe we have NVIDIA earnings this week, too. I was trying to pull it up. Maybe somebody can help me out in the den. I think we have NVIDIA earnings this week, but you know what struck me is when you go over to NVIDIA, yeah, I think we do. Can somebody help me out? Do we have NVIDIA earnings Thursday or Friday? Because the reason why I say that is, you know, you have a $7 move. Yeah, it's probably, but then you have a $15 move priced in for their exposure through next week. So you get some real volatility. And this is where understanding options is advantageous, folks. This is a great example, okay, of understanding why options are advantageous even when you're an equities trader, okay? This implied volatility number for this Friday has NVIDIA moving $7 in either direction. But if you just go out 1 week further, you're looking at about a $16 move. And normally you have a much higher move for earnings, so I'm not sure. Do we have an event going on last week that ties into them? We'll try and pull it up. I'll get it by the end of the show. But I was looking for their earnings. I thought I saw that they were this week, right ahead of Jackson Hole. But then maybe if somebody could help me out, what's going on the week of August 30th that has NVIDIA priced with a $16 move if you want exposure to next Friday, but only a $7 move? Perfect. Thank you, Spokane Bob. And that's where the options make sense, folks. So August 28th is what they're saying, and that makes sense. And you see how just by options I can say, wait a second, earnings are probably in between August 23rd and August 30th because there's the most volatility built into this contract right there, right? 15.75, almost a $16 move with exposure through August 30th, $7 move this week. A lot of the volatility this week probably having to do with the fact that, of course, NVIDIA in particular is going to be extra volatile when you got Jackson Hole going on Friday. So a great example. And then you can see what happens. After these 2 weeks, right, you want to add another week of exposure. You want to go to September 6th. Well, less than $2 implied move from August 30th to September 6th, right? You got $16 almost of implied movement by August 30th, but you want one more week of action. Market's only pricing $17.50. Only about $1.60 each week outside of these 2 weeks. Great illustration of what's coming down the line, man. We get Jackson Hole on Friday, and then you got NVIDIA earnings coming out 8/28. Thanks, Bob. Appreciate it. Yeah, 8/28. That would make sense. But a great demonstration. I was looking at it this morning. I said, wait, no, they're not going to be this week because there's way too much volatility priced into options that expire August 30th for them to be this week. Pretty cool, I thought. All right, so jumping back to those articles real quick. Talking about either bond traders taking insurance, okay, and then you talk about tech companies taking insurance as well. And you know what? I apologize. Just 1 second, folks. What I have going on this morning is woke up last night, no air conditioning. Yeah, so I was making sure that call was not the AC guy because unfortunately we got to get an AC guy out here and they're coming. But that's the only reason really I'd put it down. AC, we got no AC right now. Doing okay. I think it's 78 degrees right now, but boy, it's 9:30 in the morning in Florida in the middle of August, and it's probably going to heat up. So I had to grab that call, but that was not AC. Nonetheless, getting back into it, 5-year break-even dips below 2%. So this is just illustrating where the risk-reward lines up, right? Has the market gotten ahead of itself too quickly? You got a huge break-even 5-year dive to 2%, okay? Higher forever, right? This is a little bit what we talked about. Longer term structural shifts in the global economy to address challenges like climate change, aging population, as well as rising government deficits mean that inflation and interest rates may settle into a slightly higher range. Very real threat that's a possibility, folks. Okay. Yeah, very real threat. So just be aware. Things move dramatically quickly in this market. We seem to get ahead of it ourselves very quickly, and that could be happening again. So don't expect some radical speak from Chairman Powell, I would say, this Friday. He's going to talk about, they don't have to. Why would you say anything when you get a full month of data in early September before you need to make your next decision on September 18th, right? There's absolutely no need for him to deliver the type of clarity that this market really wants when it comes to cuts and the amount of cuts that are priced in right now in fixed income. There's just no necessary need. There's no need to do that for Chairman Powell. So this one talks about tech stocks, okay? And yeah, you talk about it, man. I mentioned the S&P 500 alone, 8.5% acceleration lower to kick off August, and then over 9%. We're up more than 9% off the lows that we made 2 weeks ago today in the S&P 500, folks. Did you hear that? We're up more than 9% from the lows. To those buy dip buyers out there, congrats. 9% for buying the SPY in 14 days. Pretty remarkable. But check it out. Protection costs for tech stocks remain high. All right? And yeah, you can see it, man. Since the end of last year, tech stocks have mostly gone up. Getting into the numbers here. Here we go. I want the spread. Yeah. Did they have a chart? Yeah, they did. Here's the hedging costs, okay? And that's NVIDIA. I thought they had one for the entire market in here. But they're talking about the 3-month spread. And you're looking at, yeah, they did, right? Where was it? Up here? I think so. Yeah, this is the one. Okay. Protection costs for tech stocks remain high. Look at where they were coming into June. Okay, and yeah, we did peak out a little bit. That was probably when you had the market trading down 4 or 5% a day, right? 2 weeks ago, the cost to hedge was obviously more expensive than it is now when the market's popped 8.5%. But you can see where we are. Okay, there's still some fear in this market. We are well above where we've been in this previous run higher and well off where we were on the 1 average. It's very high to hedge that. That's part of this market that you want to pay attention to because people are paying attention, man. You do not get this type of a run without that volatility. And when you get that type of a volatility, it might be indicative of future things potentially coming down the line. And with that, you got NASDAQ 100 taking off a little bit lower on the opening bell. We're at 19,562. S&P still positive by 5. You get the Dow up by 124, catching a bid, 40,919. Stay tuned, folks. We'll come back. We'll talk a little bit of gold. We'll talk some DXY. We'll be right back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets pretty much where we kick things off. All markets in the green. NASDAQ 100, you get back to where we were, basically flat, 19,614 right now. Let's jump around to some of those equities that are moving. Apple shares slightly red to kick off the trading week. Microsoft slightly red as well. Amazon shares slightly in the green. We jump over to AMD. They're up by 2.2%. They're buying an AI infrastructure company for about $5 billion this morning. You jump over to Tesla shares. They were higher. They're lower. A little volatile as usual. Tesla up by about 60 pennies, 0.2%. And we jump over to Tesla. So the journal out this morning or last night? Where is it? No, this morning. Tesla trails rivals in offering driver assistance feature in China. Now, my general take is that it's going to be really hard with the amount of Chinese EV companies for Tesla to be the success story in China. And articles like this really put the spikes on your back to that degree in terms of, we know how China works, right? There's plenty of EV companies in China. There's probably no reason why they're going to let Elon ever suck a bunch of money out in terms of profits for Tesla out of that industry, out of China. Doesn't mean that they're not going to be a player in that, but stories like this illustrate how hard it's going to be for an American company run by the richest man in the world to infiltrate China's electric vehicle market with the competitors that you already have in that market that can probably make the case better to Xi that they're the ones that China should build out to dominate that industry versus an American company like Tesla. Tesla's inability to roll out its most advanced driver assistant features in China has put them behind its EV rivals from China. It wants to enable drivers outside to use enhanced version of autopilot, which it calls full self-driving using the software. We've all seen the videos, okay? And this is which is allowed by the U.S. by the end of this year. So these are the features already in the U.S., which takes a lot of grief online if you've ever went down the YouTube rabbit hole of Tesla self-driving cars gone wrong. Beijing has yet to approve the latest Tesla driving tech amid concerns about accidents involving the software in the U.S., as I mentioned, as well as about data security. Yeah, that's the other big part of this, right? Tesla also hasn't received permission to transfer driving data collected from Tesla in China to the U.S. There's going to be some big problems when push comes to shove. The devil's always in the details, and these details matter. Market share for new energy vehicles in China, first half of each year. Tesla's in the red, folks. Okay? BYD is in the gray, we'll call it. Dark gray, whatever you want to call it. Yeah, this is market share first half of each year. And you can see Tesla was at 8.8, they're at 9.5, and now they're at 6.8. So be careful for Tesla shares here. And they go on, but you get the point, right? Sagging sales. China accounted for 20% of Tesla's revenue in the first half of this year. But look at those sinking numbers. So Tesla's a story about other things happening. And it's pretty remarkable. And that story may be real, okay? But it's a story on other things happening, as in the future premise of future technology valued at $700 billion. And it might get there, okay? But that's a very volatile risk, and I'm not sure a lot of people realize that that's predicated on nothing to do with the numbers that are currently there. You got 20% of your revenue coming from China. You have shrinking share of value, marketplace value, market value over there. We all know how that goes. It's been said. All right, what else we got going on in this market? Oh, yeah, how about this one? 7-Eleven. The Japanese owners, well, they may be selling, and this has to do with the yen to a certain degree as well. If you're going to try and buy a Japanese company right now, folks, now would be the time to use some dollars to pay yen to try and buy that company. Now, I'm tongue-in-cheek. Not many Japanese companies actually get sold to that degree like that, especially. But guess what? They're going to offer a price that they probably can't turn down. That's how it basically looks here. Now, what's interesting is that the Japanese owner originally was like a franchise. And they bought the main company. I'll have to pull that one back a while back. But yeah. So, yeah, 14,000 stores is what the company 7-I, okay? Yeah, I got to get these companies. Circle K is basically the one that's going to buy their larger rival, 7-Eleven owner 7-I, okay? So Circle and K operator is Kauche Tard, however you pronounce that. But the kicker here is that you have 7-I valued at about $31 billion before the offer, okay? And you have 7-I has 85,000 stores in Japan. But then you have Circle K with about 14,000 stores, but Circle K is valued at about $60 billion versus 7-I with 85,000 valued at $31 billion. And they talk about in here that, yeah, it depends on the price. And a weak yen has made it more attractive, and anything north of 7 trillion won, they're going to have a tough time turning that down. And that's going to be the deal. Yeah, pretty interesting, though. 7-Eleven. And there's your surge higher, of course. Now, pretty interesting that all you're doing is you're surging back to where you were in March before that pullback. But that's a perfect segue. We'll jump over to the dollar yen right now. Yeah, you're thinking about visiting Japan, man? Make it happen. Talked about it before many times, but I was over there very fortunate when I was about 16 or 17. I took Japanese in high school for middle school and high school. So I took Japanese and the culture in middle school and high school, 6 full years. I went over there to Japan the summer between my sophomore and junior year of high school, which is remarkable to me at this point because kids seem so young at this point at that time. But it was a school-sponsored trip. Stayed with a host family for 30 days, about almost a full month. Tremendously kind family, the people there, everything, the culture. Check it out if you get the opportunity. It was an amazing trip. Hopefully I make it back there at some point. But yeah, we got the yen pulling back to 146.41 right now. But you look at this thing, and where did I go? Because I remember I went in 96, 97 about, and I remember that it had weakened tremendously from where it was, and that's because the yen had been trading at a price point of 82 at one point. So we're at 146 right now, and when I went over there, I think it would have been about I graduated high school in 98, so it would have been somewhere around 96, and there's 96. So we went to 105, because I remember even then, right, 16 years old, my dad's teaching me about the market, and he was telling me, better prices for the yen than we were getting, so this is a better time to go than now. But boy, you liked it at 110. You're going to love it at 146, man. Pretty remarkable, but 7-Eleven going to get purchased, and then we jump over. So what do you have? You have the yen strengthening a bit, but boy, I say a bit off 160. And remember, a higher number here means yen weakness, okay? The dollar yen it's how many dollars, it's for $1, how many yen does it get you? Well, when this goes up, that means the dollar is getting stronger and the yen's getting weaker. Because that means for $1, I'm getting 160 yen right now. And I used to get 110 yen when I went over there in 1996, not to date myself. We got the dollar right now down 25 pennies. We'll be right back, folks.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets just chopping around. NASDAQ 100 just in the red by 14 points. S&P's right now positive by 6. And yeah, we take a look at that dollar index. So you got DXY this morning, 102.19. Now we got to take a look at yields. Going to be in focus, as I mentioned. We got Chairman Powell speaking Friday morning. And we got the 10-year right now. Yeah, quite the slide. As we're sitting just under 3.9%. Let's pull it up to get the number. Come on, here we are. Yeah, 3.88 we'll call it. 3.88, the yield on the 10-year right now. Whoops, and we got the dollar. They're talking about the dollar. Look at that. 102.001. 1/1000th of a point away from hitting that on the dot. Pretty much nailed it as we trade to 102. Nice round number. We have a low back here in the beginning of the year of 100.617. You're going to get some movement in yields this week with Chairman Powell, especially Friday. And you're going to get some move in the dollar as well. And we will see where the dust settles. And you take a look at gold. They're talking about gold as well. It all relates, man. Gold, Yeah, a little bit of a pullback. We're negative by $5, but look how we're breaking away from this consolidation area. And this consolidation area in gold, all right, that's your upper boundary that you were chopping around. Look how small it looks compared to the actual consolidation we got when we broke away from 2000, right? And if you think about it, the runs that you have here, we break above 2,000. We're 500 points above that price level. I mean, gold has 800-point runs when you're making big moves, man. You back it up to where we were 2008. You're at 800. You go up to 1,600 range, even to 1,800, right? That's an 800 to 1,000-point rally. Percentage-wise, you doubled in price, okay? You do it again when you go from 1,200 in November of 2018 up to 2,000 in the highs of September of 2020. And when you break above this, you're 2,000. Maybe we're on our way to 2,800. Wouldn't be outlandish to any degree. All right, don't forget, folks, we got our man Larry Pesavento. He's got his live trading coming up on this Friday. That's going to be a heck of a day. Head on over to the front page of TFNN. You'll see Larry's live trading right there. You can use code LarryOggs. Code's right there. Save $50. Check it out. Great trading event Friday. Stay tuned for Basil. He's coming up next with the Tiger Technicians Hour. I'll see you tomorrow, folks. Have a great Monday.